Ladies and gentlemen, let's be real for a second. If you're staring at that $79 figure on your screen, you're missing the signal. You're watching the scoreboard while the stadium is literally on fire. The price is the noise. The price is the distraction. The price is a lagging indicator of a reality that has already shifted beneath your feet. While retail investors are debating whether $79 is too high, the tectonic plates of the global industrial complex have just snapped. The foundation of the modern tech economy has cracked. Most people are too busy looking at a line chart to hear the sound of the collapse. The real news today isn't a number, it's a name. It is a name that commands more market-moving power than most central banks. That name is Elon Musk. While the world was busy watching one-minute candles, something fundamental happened. While high-frequency trading algorithms were fighting over fractions of pennies, the landscape changed. The man who controls the single largest solar energy footprint on Earth did something rare. The CEO of Tesla posted 4 words that have changed the trajectory of this market forever. Responding to a report on the evaporating supply of physical silver, Musk spoke. Elon Musk wrote, "This is not good." To the average person scrolling through their feed, that sounds like a casual comment. It sounds like a throwaway observation from a man who spends his life looking at data. But you have to understand the gravity of who is speaking. This isn't a hedge fund manager trying to talk book to save a quarterly bonus. This isn't some pundit trying to generate clicks to satisfy advertisers. This is the man whose entire empire is built on the back of silver. His EVs at Tesla require silver. His orbital electronics and SpaceX rockets require silver. His massive energy storage systems at the gigafactories require silver. When he says the supply situation is not good, he isn't making a price prediction. He is issuing a distress signal to the entire industrial world. We have to differentiate between the two types of people in this market. On one side, you have the speculators. These are the people who buy silver hoping to sell it for more paper profit. To them, silver is just a ticker symbol on a digital app. If the price goes up, they feel smart. If it drops, they panic. They are playing a game of musical chairs with digital contracts. On the other side, you have the industrial users. These are the Elon Musks of the world. For them, silver is not a trade. It is a raw material requirement. It is a biological necessity for their companies to exist. Tesla cannot build a single car without silver. SpaceX cannot navigate a vacuum without silver. Solar City cannot generate a single watt of renewable energy without silver paste. For Elon Musk, silver is like oxygen. You don't care what the price of oxygen is until the air in the room is running out. At that point, the price becomes irrelevant. You just need to breathe. This is not good is the sound of an industrial giant realizing the room is getting stuffy. For 40 years, the silver market has been dictated by the bullion banks. They used paper silver to keep the price artificially low. They created a world where the supply of paper was infinite. They decided that silver was just a pet rock. But Elon Musk doesn't live in the world of paper. He lives in the world of atoms. You can't solder a circuit board with a futures contract. You can't reflect sunlight into a solar cell with a derivative. Musk deals in the physical reality of the periodic table. He knows that silver is the most electrically conductive element known to man. He knows that there is no substitute that doesn't result in a massive loss of efficiency. When he acknowledges a shortage, it serves as a starting gun for every other CEO. Tim Cook at Apple is reading that tweet. The CEO of Samsung is reading that tweet. The heads of the major battery manufacturers are reading that tweet. They are all looking at their own spreadsheets right now. They are realizing the same terrifying truth. They are all competing for a shrinking pile of physical metal. The most aggressive guy in the room just admitted he's worried. The signal we are talking about today is the end of complacency. For the last decade, industrial users have operated on a just-in-time inventory model. They didn't feel the need to stockpile silver because they believed the lie of the paper markets. They believed that if they needed 1 million ounces, they could just pick up the phone. They trusted the London vaults. They trusted the COMEX. Musk's tweet is the moment that trust died. He is looking at the inventory data. He sees that COMEX registered silver is down 70%. He's realizing that just in time is about to become not in time. By saying this is not good, he is signaling to his procurement officers. He is telling them to stop worrying about the price and start worrying about inventory. He is telling the world that Tesla is securing supply at any price. In a vacuum, there is no price. When a company needs 10 tons of silver to keep a factory from shutting down, they don't care about $79. The lack of silver is a total catastrophe. We are entering a phase where the scoreboard struggles to keep up with the physical reality. We are going to see a massive divergence. The screen will say one thing, but the vaults will say another. Elon Musk just told you that the shortage is real. It's physical and it's critical. He has seen the data for 2026. He has seen the China export ban coming in 4 days. He has checked his own internal supply lines. His conclusion was simple. This is not good. If you're waiting for $79 to turn back into $30, you are betting against the laws of physics. You're betting against the world's most successful industrialist. The signal has been sent. The corporate scramble is on. The stadium is burning. The scoreboard is about to melt. You have to realize that when we talk about silver, we aren't talking about jewelry or coins. We aren't talking about some shiny relic of the past that people hide in their basements. We are talking about the fundamental DNA of the modern industrial world. We are talking about the material without which the 21st century literally grinds to a halt. The world of high finance loves to pretend that every commodity is interchangeable. They believe that if the price of one metal goes up, you can just swap it for something cheaper. But physics does not care about your economic theories. Physics does not negotiate with your balance sheets or your profit margins. In the world of physical reality, silver is the king of the hill, sitting alone at the top of the mountain. Silver is the most electrically conductive element on the entire periodic table. It isn't just good at moving electrons, it is the absolute gold standard for conductivity. It conducts electricity better than gold, better than copper, and better than any synthetic material ever engineered. It also possesses the highest thermal conductivity and the highest optical reflectivity of any known metal. In a world currently obsessed with green energy, electrification, and artificial intelligence, silver is the oxygen. You cannot build the future without this specific set of atomic properties. Take Tesla as the prime example of this industrial necessity. A modern electric vehicle is essentially a high-performance supercomputer on wheels. It is packed with thousands of electrical connections, sensors, and complex battery management systems. Every single one of those systems requires silver to function at peak efficiency. When you're pushing high voltage from a battery to a motor, you cannot afford resistance. Resistance creates heat, and in an EV, heat is the enemy of performance. Heat destroys batteries and causes catastrophic system failures over time. To minimize that heat and maximize the range of the vehicle, you must use silver contacts. Wall Street analysts will tell you that Tesla could just switch to copper if the price hits $100. They are wrong, because switching to copper increases electrical resistance and generates more heat. If you switch to copper, you decrease the efficiency of the car and shorten its driving range. In a competitive market where every mile of range matters, switching to an inferior conductor is not an option. It is a surrender of technological dominance that Elon Musk is not prepared to make. Next, look at SolarCity and the entire photovoltaic industry. The green energy revolution is quite literally built on silver paste. When you look at a solar panel, you see those tiny silver lines running across the blue cells. That is silver paste, and its job is to collect the electrons knocked loose by sunlight. You need a material that can move those electrons, with almost zero loss across the surface. Silver is the only material that can survive decades of exposure while maintaining this level of performance. Dozens of attempts have been made to replace silver with copper or nickel in solar cells. The results are always the same, a massive drop in conversion efficiency. If a solar farm loses even 3% efficiency because they tried to save money on metal, the project fails. The physics of the solar cell demands silver, and there is no plan B that works as well. Musk knows this better than any politician or any banker in New York. He isn't just looking at a price chart, he is looking at his bill of materials for SpaceX. He's looking at rockets that rely on silver-zinc batteries to survive the vacuum of space. He is looking at Starlink satellites that require silver for high-frequency telecommunications. He is realizing that his entire business model is a massive short position on physical atoms. He has sold millions of cars and signed contracts for solar roofs that require silver he hasn't yet secured. This is the moment the market shifts from a financial war to an industrial war. For decades, the silver market was a playground for banks like JP Morgan using paper leverage. They sold digital contracts to each other to suppress the price and keep the game going. But an industrial user like Tesla doesn't want a digital contract or a PDF promise. They want the silver in the factory and the vats being turned into conductive paste and wire. You cannot solder a circuit board with a futures contract from a bank in Manhattan. As the supply of physical silver dries up, the paper lies no longer have the power to control reality. The vaults in London are being drained by procurement officers who realize the air is running out. If an assembly line for a $50,000 car stops because you're missing $50 worth of silver, you've lost. It doesn't matter if you have billions in cash if the physical atoms are not available for purchase. This is what Musk meant when he said, "This is not good." He is seeing the just-in-time inventory model collapse in real time. He is looking at the data from China and the mining output from Mexico and Peru. He is realizing that mining production has flatlined because the price was kept too low for too long. We are entering a scarcity event that no amount of money printing can fix. In this new industrial war, the price of the metal becomes secondary to the access of the metal. We are moving into a world of price inelasticity where the buyer pays whatever is demanded. If silver goes to $200 an ounce, it adds a negligible cost to the final price of a luxury EV. They can pass that cost on, but they cannot pass on the cost of a factory that isn't producing. Musk's tweet was the public admission that physical reality is about to humiliate the financial markets. He is signaling that the era of cheap, abundant, high-conductivity metal has come to an end. The scramble for atoms is on, and the person who holds the physical metal is the only one who wins. Physics does not negotiate, and right now, physics is demanding a much higher price for the world. The era of corporate comfort is officially over. For decades, the giants of the tech world operated under a philosophy of just-in-time inventory. It was a lean, efficient, and profitable way to run a global empire. The idea was simple: never tie up capital and raw materials sitting in a warehouse. You relied on the global supply chain to deliver exactly what you needed, exactly when you needed it. This system worked perfectly as long as the world was stable and the oceans were open. It worked as long as the vaults in London and New York were overflowing with physical metal. But Elon Musk's recent distress signal has exposed the fatal flaw in that logic. He hasn't just signaled a price hike, he has signaled the death of the just-in-time model for strategic minerals. He is replacing it with a frantic, survivalist scramble for just-in-case stockpiling. To understand the scale of this shift, you have to look at the math of an assembly line. When a company builds a complex product, they manage thousands of subcomponents. If 99.9% of those components are ready, but you are missing silver contacts, the line stops. A $10 billion factory sits idle because of a missing ounce of metal. Thousands of workers stand around with nothing to assemble. To understand why the signal is vibrating through the halls of every tech giant, you have to look past the charts. You must focus on a specific date, January 1st, 2026. In less than 100 hours, the rules of the global silver market are scheduled to change forever. While we have been distracted by the $79 price tag, China has been constructing a physical iron curtain. China is the world's second largest silver producer and the unrivaled king of refined silver processing. They aren't just adjusting taxes, they are moving to lock the gates on the nervous system of the industrial world. The news that has Elon Musk and every other CEO on edge is a new high-threshold export licensing system. Starting New Year's Day, any company wishing to move silver out of China must meet brutal new criteria. Exporters must now prove an annual production capacity of at least 80 tons of refined metal. They must also maintain established credit lines of roughly $30 million to qualify for a government stamp. These requirements aren't just boring paperwork, they are a strategic guillotine. By setting these thresholds, the Chinese government is wiping out the small and mid-sized export market. Hundreds of independent brokers and regional trading houses will be severed from the global supply chain. Overnight, the primary channels that supply Western companies like Apple and Tesla will be officially closed. This is not about controlling trade. It is about ensuring the physical metal stays inside China. If a refinery cannot export because it fails the state mandate, its silver floods the domestic Shanghai market. That silver goes directly to Chinese industrial titans like BYD and the solar giants of the East. This is a calculated act of resource nationalism designed to secure a massive technological advantage. China knows that you cannot win the AI revolution or the green energy transition without a flow of silver atoms. By restricting exports, they are telling the West that the era of being the world's discount refinery is over. The timing of this blockade is particularly lethal for Western manufacturers. It is hitting just as the global silver market enters its fifth consecutive year of structural deficit. We are looking at a shortfall of over 100 million ounces for the year 2025 alone. By removing Chinese supply from the international market, that deficit goes parabolic. China currently controls roughly 60% to 70% of the global refined silver supply chain. When they turn off the faucet, the global price of silver becomes a total myth. We are entering a bifurcated world with two distinct realities for silver. There will be the China price, where metal is abundant for their own domestic manufacturing, and there will be the Western price, where the rest of the world is left fighting for scraps in empty vaults. This is why the $79 price is a gift that will vanish once the first force majeure notices are sent. The market is currently trying to price in a supply shock that has not yet officially begun. Once January 1st hits, the scramble will move from a simmer to a full-blown industrial panic. Musk sees the board and knows his factories in Texas and Berlin are dependent on this blocked flow. He knows the just-in-time inventory model has left the Western world completely naked. China has realized that in a world of paper promises, the person who holds the atoms holds the power. They aren't just tightening the market, they are capturing the entire supply chain. They are securing their own lifeboat before the ship sinks and leaving the West standing on the deck. This brings us to the nightmare that keeps Musk awake. The physical iron curtain is dropping in 4 days. If you think the physical deficit is terrifying, you need to look at the paper market. This is where the real crime scene is located. We are witnessing the greatest delusion in financial history about to be shattered. The brute force of industrial necessity is colliding with a mountain of digital lies. There is a specific number that defines this illusion, the paper-to-physical ratio. As of late 2025, that ratio has reached a staggering 356 to 1. To understand why Elon Musk is sounding the alarm, you have to visualize that number. Imagine a vault containing exactly 1 ounce of physical silver. Now, imagine 356 people standing in a line outside that vault. Every single person holds a piece of paper claiming they own that specific ounce of silver. They all paid for it, and they all believe it is safely stored in the bank. For decades, this system worked because most of those people were just gamblers. They were hedge funds and high-frequency traders who only wanted to trade the price. They never actually wanted to touch the metal. They just wanted the digital profit. This is the essence of a fractional reserve, system applied to a strategic mineral. The bullion banks sold 356 times more silver than they actually held in their vaults. They were confident that nobody would ever show up at the door and ask for the atoms. It was a game of musical chairs where the music never stopped playing. But today, the music didn't just stop, the power was cut to the entire building. When Musk tweets about a supply crisis, he is signaling that the era of paper promises is over. An industrial giant like Tesla does not want a cash settlement or a refund. They need the physical atoms to keep their robots moving and their batteries charging. Suddenly, those 356 people are no longer just traders. They are desperate competitors. The moment the first industrial user demands their physical ounce, the illusion evaporates. The other 355 people are left holding a piece of paper that cannot build a car. They might get a check for the last traded price, but that money is useless in a shortage. You cannot solder a circuit board with a refund check or a credit note. We are seeing the early tremors of this collapse in the official inventory data. The COMEX registered inventories are the metal specifically available to back these paper claims. Those inventories have plummeted by roughly 70% over the last few years. The buffer that allowed the banks to suppress the price has been burned to the ground. In some regions, the usable silver stockpiles are down to a 30-day supply. That is not a margin of safety. It is a hair trigger for a global systemic meltdown. This is why the banking system is terrified of a single 4-word tweet. If Musk bypasses the exchanges and buys a mine's entire production, he breaks the collateral pool. He makes the 356 to 1 ratio even more insane by removing the physical floor. Mathematically, by removing the physical metal, he exposes the entire fraud. You cannot print silver, and you cannot print industrial productivity. The $79 price tag is a synthetic derivative generated by a computer that assumes infinite supply. But the industrial user is the auditor that the banking system cannot bribe or silence. Right now, the auditor is knocking on the door with a fleet of semi-trucks. They are here to haul away the last of the physical collateral. When the paper promises finally collide with the physical wall, the price will not just rise, it will reset to a level that reflects a world that has run out of its most critical conductor. The paper market is dying, and the physical reality is taking its throne. We have reached the inevitable conclusion of this report. But in reality, we have arrived at the birth of a new monetary era. The events of late December 2025 have confirmed what every strategic investor has been waiting for. The signal from Elon Musk was the final piece of the puzzle. If you're waiting for a pullback to $30, you are waiting for a world that has ceased to exist. You are waiting for a world where China exports freely and mines produce a surplus. That world died the moment the just-in-time model collided with a 5-year structural deficit. We are now establishing a new industrial floor for the metal. The conservative mathematical output of this crisis is clear. $100 is no longer a target. It is the new base case for the global market. To a retail speculator, silver moving from $30 to $100 feels like an impossible bubble. But to an industrial user like Tesla, the price difference is a rounding error. If silver is $30, the metal in a $50,000 electric car costs exactly $30. If it goes to $100, that cost rises to only $100. A $70 increase in raw materials does not stop a customer from buying a car. But a total lack of silver stops the entire multi-billion-dollar factory. This is the definition of price inelasticity in the real world. Industrial giants will pay any price to avoid the catastrophe of an idle assembly line. The $79 price we see today is not a peak. It is a launchpad for the next move. We are entering the unobtainium phase of the silver market. The price must now rise high enough to physically force metal out of the hands of hoarders. It must rise high enough to make extreme recycling and deep earth mining profitable. We are no longer looking at a simple commodity trade. We are looking at a fundamental revaluation of the nervous system of the tech world. This is the greatest wealth transfer in history, but wealth is never truly destroyed. It is merely transferred from those who hold paper to those who hold atoms. For 40 years, the financial economy cannibalized the real economy. Now the real economy is devouring the financial world in a physical squeeze. The banks are insolvent, the vaults are empty, and the illusion is exposed. Elon Musk's "this is not good" was the flare gun in the dark night sky. It revealed a banking system in retreat and an industrial complex in a panic. The emergency liquidity injections we saw today were the white flag of the Fed. The central banks have realized they can print money, but they cannot print silver. In a world of infinite currency and finite resources, the math is simple. The price of the resource must rise to balance the infinity of the printing press. If you have the metal, you have the position and the ultimate leverage. The $100 wave is an incoming tide that no banker can stop. The game was rigged for a long time, but physics has finally rigged it in your favor. The paper era is over, and the physical era has taken the throne. Hold your ground, because the reset is here and the real move is just beginning.